So let's first start talking about income tax withholding from wages. And of course, this is not just from wages, but also bonuses, commissions, tips, all types of earned income where the individual is an employee. So recall that employees will fill out a W-4 form. So they'll fill this out when they first start work at an employer, or when there's been some sort of change to their personal life that would be reflected on the W-4. One of those changes would be filing status. So if you were single and you got married during the year, you'd want to fill out a new W-4 to reflect that change. If you were married and you got a divorce or your spouse passed away, you'd want to fill out a new W-4 to reflect that change. So just recall the W-4 has information about the individual, name, address, all that stuff, social security number, but then also their filing status is listed. So we want to make sure that that filing status, and this would be the filing status that they would use then on their tax return. So that's just step one. Step two, remember this, we have this checkbox withholding. Now there are different, this section is filled out if there is more than one job or if the spouse also works. So if the single individual has more than one W-2 job, then they would need to complete this section. Complete this step if you hold more than one job at a time, or you're married filing jointly and your spouse also works. There are three different ways that this section can be filled out. There is this tax estimator that can be used. It's an online tax estimator. It's very accurate as far as the withholding goes, but it's also very involved. It's essentially like completing a tax return. It asks you all those questions that are asked on the tax return. You know, what total income do you have? Tell me about your dependents. Tell me about your interest income. Tell me about your dividend income. Tell me about this, that, and the other. It's essentially, if you go to that, if you were to go to that site, it is, and you go through it, if you've ever used TurboTax or some program like that where it asks you questions, it's a lot like that. It's accurate, but it's a lot to go through in order to come up with that result. Now, there are a couple of other options that aren't quite as involved. One is a multiple jobs worksheet, which is part of, I don't know if they have one here. Yeah, part of the W-4 where the employee can fill this out. Again, they're only filling this out if there is more than one job. So if you're a single individual or head of household and you only have one job, there's no need to fill out any of these items. You don't have to fill out this step at all, this step two. But going through this worksheet, again, is pretty accurate, not as accurate as the estimator, but also not as involved as the estimator to determine what your withholding should be. The third method is super simple. If there are 2 jobs total, you may check this box. That's pretty easy. There's no calculation involved, right? Just check the box or don't check the box. So if there's 2 jobs, check it. If there's not 2 jobs, don't check it. It is more accurate than than using the multiple jobs worksheet if the pay at the lower paying job is more than half of the pay at the higher paying job. Otherwise, B is more accurate. What does that mean? So we've got one person that's making $50,000, or one job that's earning $50,000 and another job that's earning $30,000, so 2 jobs. Pay at the lower paying job is more than half of the pay at the higher paying job. Well, in this case, that is true. Therefore, we can just check this box and be done with it. So in order to be the most accurate, you would want to use those parameters. In reality, a lot of people will just either check the box or not check the box. But the more, so in this case, here you would check the box. because this is more than half of this. If it were one of the jobs was that, the other was this, you would use step B. Step B instead. So you would use the multiple jobs worksheet in that case instead. For our purposes, we're just going to use the checkbox. Either the box is checked, excuse me, or the box isn't checked. Steps 3 through 4 of this W-4 are only filled out. So step 3 is only filled out if you have dependents that qualify for that child tax credit or the credit for other dependents, which we just went through in Chapter 9. So if the person has dependents on their tax return that qualify them for one of those credits, they are eligible to essentially get a prepayment of those credits through reducing their withholding. What happens if that's claimed here, and if you are entitled to those credits, you do not have to enter it on the W-4 form. Because what this is going to do is it's going to lower withholding. The IRS is never concerned with raising withholding. So if you didn't claim it, your withholding would go up. So the IRS is fine with you not claiming it even if you're entitled to it. What they don't want you to do is claim it if you're not entitled to it, because, like I said, what this does is it reduces withholding. So in this example, this person has 2 children, and they're both qualified for the child tax credit, which means on their tax return, they would get that $4,000 tax credit. Well, what this is doing by claiming it here is it's going to reduce their withholding throughout the year by $4,000. So essentially, they're getting that credit applied to a reduction in their withholding. Same would be true if they were qualified for that credit for other dependents. So if you don't claim that here, you're just going to get the benefit of it at the time that you file the tax return. If you claim it here, then you're getting, like I said, you're getting kind of like a prepayment, sort of like that premium tax credit that we talked about, where people are getting that credit applied to a reduction in their health insurance premiums. This is the same thing. That credit is being applied over the course of the year to the withholding, so they get reduced withholding. That's step 3. If there are no dependents, or if they don't want that credit applied to their withholding, that would not be filled out. Step 4, if there is, so part A is if there's income from other sources that aren't jobs. They're not W-2 jobs. So you have interest income or dividend income or capital gain income or rent income or any other kind of income where you think you're going to owe tax. You can essentially add the income here to do the withholding, to be a part of the withholding calculation. So that's going to increase the amount that's withheld from your paycheck. For example, let's say your salary is $50,000, but you have $5,000 of interest income, and there's no withholding from that interest income, you can add the $5,000 here, and it's going to be as if your salary was $55,000. So the withholding is going to go up and account for that additional income. If you are expecting to itemize your deductions, now if you take the standard deduction, the withholding calculations, the tables and the schedules, take that into account. But if you are going to be itemizing your deductions, which means it's going to be higher than your standard deduction, if you're going to be itemizing, you can claim the additional itemized deductions here, and that will then reduce your withholding. So you can take that into account. And then ultimately, if you want any additional amount withheld, you can just put a flat amount here. Say you do all that, and you're like, I just want to have some cushion. I want to make sure I've got enough withheld. I'm going to have an extra $100 every paycheck withheld from my paycheck. You just put $100 here, and then they've got $50. That's just an additional amount that then is going to be withheld from an employee's paycheck. So all of this information is used in order to determine how much federal income tax is withheld from an employee's paycheck. So if you recall, I think I had all of you in payroll accounting. If you recall, we had these 4 minimum factors that we need to determine how much we're going to withhold from an employee's paycheck. So the first thing that we need to know is what their taxable pay is for that pay period. So taxable pay would be their gross pay plus or minus any adjustments to it. So if they have some pre-tax deductions, we're going to subtract those from the gross pay. If they have some taxable fringe benefits, so something that the employer pays for that is taxable to them, like gym memberships, that sort of thing, then we're going to add that to our gross pay to arrive at our taxable pay. Next thing we need to know is our frequency of pay. How frequently are we paid? Are we paid monthly, bi-monthly, semi-monthly, bi-weekly, semi-monthly, monthly? So bi-weekly, remember, is every 2 weeks. Semi-monthly is twice a month. So we need to know that information as well. How frequently are we paid? Again, these are minimum. This is the minimum info. For minimum factors, we may need some additional information in the form of whether there are any dependents or any additional income that they're claiming, but that stuff's not required necessarily to get if it doesn't apply, then it's not required. But all of these pieces of information are required in order to determine the withholding. Filing status. What's our filing status? That's going to come from the W-4. And the fourth one is that checkbox checked? Yes or no? That again comes from the W-4. Now, like I said, they may have used the estimator, and that's fine. They may have used the multiple jobs worksheet, and that also is fine. But if they use either of those, we're still going to need to know whether the checkbox is checked or not. But those are going to factor into our calculations. So this W-4 is necessary in order to determine how much is going to be withheld. Now remember, there are 2 different ways that I've already gone through all of that stuff. There are essentially 2 different ways to determine how much to withhold. We've got 2 different methods. We have our wage bracket method, and this method uses a table. We take all those factors and we apply it to the table, and we come up with a number for the amount of withholding. But because it's a table, it has an end point. It doesn't go on for infinity. So when we have an income level, usually it's the income level that creates the problem. The income is off the table. When we have an income that's off the table, then we have to use the percentage method. And this, we have to do some calculations using a schedule. So these are 2 different methods of, if I can get this on here, of doing the calculations. Now, the publication that they use that contains all of this information also includes some information for, you can see these are the different chapters that are in that publication. We've got wage bracket methods for forms W-4 from 2020 or later, wage bracket method for forms 2019 or earlier, percentage method for forms W-4 2020 or later, and then again, percentage method tables for forms 2019 or earlier. If you recall, in 2019, starting in 2020, our W-4 changed. And so the method, it's actually, we had some different factors that were used. Well, these 2 factors were different. these were the same. We still use this taxable pay and frequency of pay. We still needed to know that. But instead of filing status on the W-4, it indicated marital status. You were either single or you were married. That was it. There was no like head of household or qualifying widow or widower or anything like that. It was just single or married. Also, we didn't have this checkbox. Instead, we used what are called allowances. But that's why you see this list of different methods. I think for our purposes in this chapter, we're just going to look at these methods for 2020 and later. The reason they include the information about 2019 and earlier is because the W-4 forms, there's still W-4 forms floating around out there for employees that are from 2019. They haven't changed them. Like maybe nothing in their life has changed since 2019 or before that, and they haven't filled out a new W-4 form. So anybody now that starts a job, or if they have to fill out a new W-4 form, would use the W-4 from 2020 or later. They would not use the 2019 or earlier. But because there are still W-4s floating around out there that are from an earlier period, we still have these methods for calculating withholding for those forms. Let's see. What else do I want to say? So here is, well, this is for, like, there are different methods for withholding on pensions and annuities. There's a special section in that for pensions and annuities as well, and that's what it's referring to here. I think so. Employers withholding. Although this is really weird because it says periodic payments of pensions and annuities, but then it's talking about employers withholding. I don't think that's right. One of the things, so these worksheets are super helpful. By the way, they have a worksheet for each of these different methods, and just following the worksheet step by step can help you to determine what the withholding is. Yeah, I think this is strange. I think this should actually be for payroll. This shouldn't be for pensions and annuities. I think they've got the wrong title up there. So this would be used, this automated would be used, could be used if the employee has a W-4 form for 2020 or later. I think this is just for 2020 or let's see. Oh, you can use it for either one. So if they have submitted a form for 2020 or later, you can use it. So if the employee has submitted a form to W-4 for 2020 or later, figure the adjusted annual wage amount as follows, and then you use the steps to make, and you have to make a certain adjustment to this to determine what their wage amount is, and then you apply this wage amount to the appropriate table based on their filing status. If they have not submitted a W-4 for 2020 or later, which means they have one of those, a form from 2019 or earlier, then you use these steps. So it's either one or the other that is used. So let's go through this and this automated payroll systems method. You'll see up here, they've got, where is it? These four tables or four methods are for manual payroll systems. So if you're doing it by hand, you would use these. If you're using an automated payroll system, so it would be pre-programmed into the payroll system. You use the system uses this method. I think your book likes to use that method, which is the example that they're using here, the automated system. Let me see if they give an example of, oh no, they do give the manual percentage method tables for manual payroll systems. So this is the worksheet that would be used for a manual system for 2020 or later. So in this case, so in that automated system, you are taking essentially every pay period, you're taking what they are paid in that pay period and you're annualizing it. And you're taking that annualized amount and applying it to this schedule down here based on their filing status and based on whether the checkbox was checked or if it's from a 2019 or earlier W-4, and you're applying it then to the correct table. So for example, in this one, they did all the math. The adjusted annual wage amount is $43,400. They're paid weekly. Is this, I can't remember, is this? I don't know what the filing status is. Married filing jointly. All right, so using that information, we would take the married filing jointly and the annual, so this is the row that we would use. I think they have a 2020 or later one though. So this is the row that we would use. So tentative amount to withhold of $1,160. So it takes you through, the worksheet takes you through the instructions. So we start with that adjusted wage amount, which was adjusted up there. And then it tells you find the row in the appropriate annual percentage method table in which the amount on line 2A is at least the amount in column A but less than the amount in column B, and then enter the amount from column A of that row. So column A, 17,600. Where are we here? Oh, maybe it is single. Maybe this person is single. So 17,600. So that's column A. Go back up to the worksheet. So enter the amount from column C of that row. Let's see if I've got the right. Yeah. So column C, 1,160. So the instructions are all right here to tell you how to do this. Enter the percentage from column D of that row. So we scroll back down. Here's our row. 12% is our percentage, so that's what we're going to put there. Subtract line 2B from line 2A. We come up with 25,800. Multiply the amount on that line by 12%, 3,096, and then we're going to add the 1,160 plus the 3,096 to get 4,256 for an annual amount of withholding. And then we divide this by the number of pay periods that we entered up at the top here. So they're paid weekly. They get 52 pay periods. So 4,256 divided by 52 is $81.85. In this case, they do not seem to, if there's any tax credits, so any amount in step 3 was entered, that would be entered here on step 3. If an amount in step 4, if there's an additional amount to withhold, that would be entered here. There wasn't in this particular case, so they calculated $81.85 is the amount to withhold for this pay period. So this is, again, ignore that pensions and annuities. It's not for pensions and annuities. I don't know why they put this up here. So that's for the automated. That does it. That takes the per pay amount and it annualizes it, does the calculation, and then brings it back down to a per pay withholding amount. The percentage method for manual payroll systems, instead of annualizing it, we don't do that. We just take whatever is the current pay period, and that's what we're going to use. So the steps are a little less. Well, these steps are exactly the same, where we find column A, column C, column D of that row. These steps are exactly the same, but instead of annualizing it, we're just taking the amount that was paid during this particular pay period. Accounting for any tax credits, same thing as before, and then also figuring if there's any additional amount that they want withheld. So that individual with the W-4 above, it looks like they make $5,500 every 2 weeks. So they've done the calculation based on the information in the W-4, what the withholding is. It comes out to $413.37. The table that's used is different from the earlier table or schedule that we used. It's still based on filing status. So each of these has its own filing status. It's based on whether or not the checkbox has been checked on that W-4. Let's see. I'm not going to go through these. So that is using the percentage method in both of those examples. If the income falls on the table, then we can use the did they give us the tables? There we go. So we can use these tables instead, and this is a much easier method. We don't really have to we still have a worksheet that we can use. It's a simpler worksheet that we use because all we're doing is we're taking this information, we're applying it to the proper table. So for example here, if they're on a weekly payroll period, so each table has its pay frequency, that's where we need the frequency. We're going to apply the adjusted wage, which was calculated on the worksheet. So that starts with our taxable pay, but there may be adjustments to it. We're going to find the range. And recall from payroll accounting that if the amount falls right on the line, you're going to use the next line up. So for example, we've got $875 to $885. If it turns out that the adjusted wage was exactly $885, we're going to use the next line down. So we'll use the $885 to $895 line. And then we're going to go based on filing status. So here, married filing jointly, head of household, single, or married filing separately. And if it was qualifying widow or widower, we would use the married filing jointly as well. So let's just say they're married filing jointly. Did they check the box or did they not check the box? If they checked the box, we're going to use the highlighted section. If they didn't check the box, we're going to use the unhighlighted section. So let's just say they have $885 of taxable income, or their adjusted wage, $885. We're going to use this second one. We're going to come over here. They didn't check the box. We're going to withhold $33 if that was their income on a weekly basis. So super simple. We just take the 4 factors that we have and apply it to the table. But we may need to have, in order to figure the adjusted wage amount, if they the taxable pay is going to be the same as the adjusted wage if the W-4 doesn't have anything in step 4. Okay, so if there was no additional income to add, or if they're not itemizing deductions, if there's nothing on that line 4A or 4B, then our taxable wages, our taxable pay is going to be our adjusted wage. The only time this is going to get adjusted is if there was something on step A, 4A, or 4B. Okay? Let's see. Oops. Questions about that? I know that's we cover that in 5 or 6 lectures in payroll accounting, but for the sake of time, I've got to summarize it. Do you guys have any questions? Is that refreshing your memory? Okay.